don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
Good morning, everyone. Bloomberg Surveillance, a simulcast, Bloomberg Radio, Bloomberg Television. John Farrell, Lisa Abramowitz, and Tom Keene, except Abramowitz is outside Toledo, Ohio. Farrell, I believe, is somewhere in Tuscany. I really have lost track of where Farrell is on a sabbatical. And we're thrilled to have Francine Lacroix join us for an extended visit today. And part of that was to save her from the tension at the Lacroix house. Let me look first at the data, negative 17 on futures, Dow futures, negative 129. Francine, your children, I know, are apoplectic right now about the grade and the A-level scandals of the United Kingdom. I mean, this is a major deal here, back to school. Some schools are all virtual. Some schools are actually trying to go back as well. Do you go into the weekend there with the kids going to college calmer?
So my kids are about 10 years too young to actually care about A-level results, but this has a huge repercussion for the government. So I don't know how much time you have to talk about, the shambles that was exams, but if you can't sit exams in person like you and I did, a long time ago, then you have to find a grading system because of COVID-19. The grading system initially that the UK wanted was basically get, the teachers to give predicted results. The government thought that would be too optimistic, and so they found this bizarre algorithm that would basically grade with a number of things, how the school has performed in the past, and things like that. That was really caused outrage, Tom, because a lot of students were marked down, and so now we've seen a reversal of that. And frankly, the anxiousness when you speak to students because of this, but also the fact that the government just lost the trust of a lot of students and their parents, means that Boris Johnson is probably having a bad week.
Fraser Nelson writes it up at the Telegraph, Francine Lacroix, and he says simply, the backbenchers are in revolt. Does Prime Minister Johnson into September have control of his majority party?
So this is, the money question, Tom. And actually, if you look at how the Prime Minister Boris Johnson has handled COVID-19, the quick reversal, how he'll handle Brexit going forward, so there are questions on how much support. Remember, it was only 7 months ago that he won in a really landslide victory. And so it'll be interesting when Parliament resits again early September, end of August, to really see how much support he actually has from the people in the House of Commons, Tom.
It's just really, really, really interesting, folks. And I don't think there's an American equivalent. I mean, I think about the uproar over SATs, or maybe, the tests that people take, I can't remember them right now, mental freeze, the high school tests that we take, or the courses we take to skip into college. And thank you, the what do you call them, Riley?
Yeah.
Advanced AP test, the advanced placement, all these things is nothing compared to this uproar in the United Kingdom. Matthew Hornbach took 6 AP courses when he was in high school and joins us right now. Matthew Hornbach of Morgan Stanley here as we look at some of the oddities of the market. Matt Hornbach, I just heard from John Farrell in the late afternoon in Tuscany, and he said, ask Hornbach about tips and the real yield. So let's go there right now. Matt, tell me what you learned about the real yield this week.
Well, thanks, Tom, for having me on. And I honestly don't remember how many AP courses I took in high school, but I definitely took quite a few. In terms of real yields, I think what we've learned is that over the past month and a half, they've probably garnered more attention than they have over the past 5 years. I will say that I do think the attention was warranted, in part because we are heading into a period of time when the Fed is set to unveil its new monetary policy strategy, which should have an element focused on inflation. And of course, real yields do react to the prospect for inflation or the lack thereof. So they are very important, and I think the market is right to focus on them.
Well, this is a huge question then, folks. Matt Hornbach, are you suggesting that this could be a Federal Reserve over 1 year or 5 years that reverts back to analysis of nominal statistics and not inflation-adjusted statistics?
Well, I think it's a Federal Reserve that is interested in achieving its dual mandate, a part of which, of course, deals with getting inflation up to a level and then maintaining it at that rate of growth. And 2% is the number. As you know, they have not had a great deal of success achieving 2% inflation over any period of time worth writing home about. And so that is a challenge for them. They're going to have to face that head on. The real question, I think, for markets is how committed is the Fed to achieving their 2% inflation goal, and what are they willing to do to achieve it? And again, you can be as committed as you want, but if you're not willing to do what it takes to achieve your goal, then chances are you're going to have a hard time getting there.
Matt, good morning from London. Is there a danger of, treasuries being in short supply?
Hey, good morning, Francine. I don't think there's any real issue with treasuries being in short supply. In fact, if the government in the United States comes together on another fiscal stimulus package, there's going to be even more supply for the market to take down. Having said that, the Federal Reserve, in its attempt to stimulate the economy, has been removing a lot of supply from the market every month. So I'm talking $80 billion worth of U.S. Treasuries a month they're removing from the marketplace, and many investors expect that to continue for the foreseeable future. So, there is plenty of supply out there, but the Fed is removing a decent amount of it. Nevertheless, when we look into 2021, across not just the U.S. Treasury market, but global sovereign markets more broadly, we are going to have a year where the private sector will have to take down more government bonds than they have had to take down in just about a decade. So it is going to be quite the year for government bond supply, and that's important because if the economic environment continues to evolve as Morgan Stanley's economists have been predicting, which is a V-shaped recovery, then investors are going to have some very interesting decisions on their hands. Are they really willing to take down government bonds and the size that they will have to take them down next year at yield levels that are, quite frankly, unprecedented?
And what does dollar do in this environment?
Yeah, so the dollar has been a very interesting one this year. We had been bearish on the dollar really beginning in late March through the July FOMC meeting. And then when we got to the July FOMC meeting and we heard Chair Powell discuss the outlook, he really didn't touch on inflation to the extent that I was hoping that he would, especially seeing as though the Fed was heading into this new monetary policy strategy framework review. And so we decided to recommend our investors, our clients, peel back from a large portion of those dollar short positions that we had been recommending. I think as we look into 2021, there are elements in place certainly to keep downward pressure on the U.S. dollar more medium term. In the near term, however, we really need more details from the Fed on the level of their commitment to achieving 2% inflation, and we need to see some commitment really in terms of exactly how are they planning to achieve that 2% inflation how long is the Fed willing to keep interest rates at the effective lower bound in order to encourage inflation to average 2%? That's very important.
Matt Hornbach, a Friday question, and I go back to one William Gross of PIMCO of a few years ago, in the phrase financial repression, just the harm here in the yield market for retirees. Is it financial repression for longer?
I think as long as the amount of aggregate demand in the economy is insufficient insufficient in relation to the amount of supply in order to get 2% inflation, then yes, the Federal Reserve is going to have to work overtime with its monetary policy in order to encourage 2% inflation to occur. And right now, the aggregate demand in this economy is really coming from the U.S. government.
Come on, Matt, let's go back to our A levels, as Francine was talking about earlier in those fancy pants AP courses. Is there any history in your study where a government can successfully reflate?
Tom, when we look at the modern history, we don't find examples of that at this point in time. Yeah. Now, perhaps it's because governments haven't been trying hard enough to reflate, but no, we don't see examples in modern history where it's happened. That's not to say, of course, that that won't change in the future, but it's tough to find examples in the past.
Just brilliant. Matthew Hornbach, thank you so much. That was just like doing the real yield on Bloomberg Television. Look for that property from John Farrell when he returns sometime near Thanksgiving. Well, Francine, I look at the real yield, and I really can't emphasize this enough. It was my first project for Matt Winkler, Francine, at Bloomberg, to forget about the real, the residual, and it's about the nominal minus inflation expectations equal whatever comes up. It could be economics, interest rates, whatever. And the nominal yield to me is really the heart of the matter. 0.625 is still unimaginable in the U.S., Francine.
I mean, unimaginable, but think about it, Tom. Just 2-3 days ago, we were looking at a 30-year German auction with a negative 0.49 or something like that. If I had told you that 12 months ago, would you have believed it?
Yeah, and Ken Rogoff and the late Marvin Goodfriend making very clear so much of this is if you're going to do this fancy theory about negative interest rates, there's got to be a courage to go further, go deeper in yields. Certainly that courage has not been there as well. We've got the courage on a Friday on radio and television to give you a data check. Negative 14, the data is better than it was an hour ago. Dow futures at negative 94, just a stick now in the VIX, 23.70, 1 full point. Dollar stronger, that's important, 93.33 on DXY. Sterling 131.06, yen 105.87. Euro, 119, that dash to 120, breaking 118, 117.73, a weaker euro. Please stay with us across this nation on Bloomberg Radio, worldwide, on Bloomberg Television. Good morning.
With the First Word News, I'm Ritika Gupta. Joe Biden accused President Trump of failing in his most basic duty to protect Americans. Last night, Biden accepted the Democratic nomination for president, and he made it clear what a Biden administration would tackle first.
As president, the first step I will take will be to get control of the virus that has ruined so many lives. Because I understand something this president hasn't from the beginning. We will never get our economy back on track. We will never get our kids safely back in schools. We'll never have our lives back until we deal with this virus.
Biden also said the U.S. doesn't need a tax code that rewards wealth more than it rewards work. He says it's time for the biggest corporations to pay their fair share. And Secretary of State Mike Pompeo has formally demanded that the United Nations reinstate global sanctions against Iran. Pompeo also slammed European allies who opposed the move. He accused them of a failure to lead and of appeasing the Iranian regime. And President Trump says this will be the most fraudulent election in history. The president told Fox News, quote, "They're trying to steal the election." He said that mail-in voting will lead to widespread cheating, even though there's been no evidence of that in previous elections. And former Trump campaign guru Steve Bannon is free on a $5 million bond. Bannon has pleaded not guilty to charges he conspired to commit fraud and launder money while raising funds for a border wall. Protesters say the former White House chief strategist defrauded hundreds of thousands of donors. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
During a major crisis like this, the European system of greater social cohesion gives you better economic outcomes than the one of the United States that is just Wild West capitalism.
Good morning, everyone. Dr. Rubini there with a phrase out on Twitter, Wild West capitalism, which got a lot of attention as well. We thank our team for getting Dr. Rubini in at a very early hour this morning. Hannah Levitt of our banking team writing up on Wells Fargo, and we report at Bloomberg News that Wells Fargo is beginning their substantial job cuts. These are widely presumed. I love the phrase within the blather, regular job displacement activity. I have no idea what that means other than a lot of people at Wells Fargo will be shown the door. 226,000 roughly 10,000 would be 4.4% jobs reduction, and Hannah Levitt reports that tens of thousands may be out the door. That, not a surprise, but nevertheless the reality from Wells Fargo this morning. Francine Lacroix in for Lisa Abramowitz and John Farrell, a simulcast here on Bloomberg Radio and Bloomberg Television. We're going to take the Wells Fargo story, Francine, right over to Brooke Sutherland on industrial America as well. Brooke, my head's spinning. I don't know what to make of this. And then I got John Deere out with, I think, pretty good numbers. And yet you got to believe that industrial America is going to right size. Are they going to right size?
They are, and I'm really glad you brought that up because that's really sort of the caveat to optimism here. I mean, Deere shares up more than 3% this morning, and that really is driven by this improved outlook. They're looking for less sharp declines than expected in both the agricultural and construction segment. But part of the reason why they feel better about financial statements is expanding job cuts. So when I talk about euphemism, Deere is calling it a broad employee separation program, and however you slice it, that does not sound particularly good. But I think that's really the question I have is, yes, things are, getting better for some of these industrial businesses. How can you really say they're trending in the right direction when you have so many manufacturers coming out with fresh announcements of job cuts, and more of them are being labeled permanent?
Are they right-sizing off of challenging organic revenue growth? Folks, organic revenue growth, I'll thank Jack Welch for that, is an industrial America statistic about the actual revenue growth from the present and assumed future businesses of the company. Are they just locking in a diminished organic revenue growth, Brooke?
Yes, when I say it's improving, they're still looking for sales to decline. So it is, getting better. It's not quite as bad as how they thought things were going to look in May when they gave a forecast then, but they're still looking for, about a 10% decline in global sales of agricultural equipment. Construction equipment, you might see that down by 25% globally. So on the construction side, that compares with the call in May for down 40%. So obviously this is getting better, but you are still seeing declines here. Deere talks about how they want these separation programs to make the company leaner and more agile. So, I think that just gets back to the idea of these manufacturing companies see this as somewhat of an opportunity to hold on to higher profit margins and keep those even when we do start to see more, stronger signs of a recovery here.
Brooke, a number of manufacturing jobs in the U.S. have been lost. How many of those lost jobs will actually come back once the pandemic gets better?
I'm very skeptical that all of them are going to come back. I think it's really striking when you talk about this idea of reshoring, which keeps coming up on these earnings calls, but these companies are not reshoring to hire Americans. They're reshoring with the help of automation. Bank of America was out earlier this week with a fascinating report talking about $1 trillion to bring back all of export activity from China to the U.S., but all of the participants they talked to were looking at using automation, not looking at hiring more people. And so we know when these companies are talking about these job cuts being permanent, talking about being more agile, they're not going to turn around in 2 years and all of a sudden want to hire a bunch more people. And so I do think there's a very real risk that these manufacturing jobs just do never come back.
Brooke, how much of these, the supply chain changes means that actually activity will come back to the U.S.? Have we seen the bulk of the changes given trade wars and given, the pandemic, or is more to come?
I don't think we've seen all of it yet. I think a lot of this is still in the idea phase, and you're right, the tariffs were a part of this, and companies were already sort of thinking about it. But when I've talked to manufacturing companies, they say that the pandemic has pulled these discussions forward. So we do have some concrete examples. Stanley Black & Decker is one that's talking about reshoring in the near term, and also some of the life sciences companies. But I do think you'll see more and more of this. And, again, I just come back to it's really telling that a lot of these comments are coming not from the companies themselves, but from the automation companies. Companies like Rockwell Automation and Emerson, which are seeing demand from their customers for that automation equipment to make this reshoring possible.
Brooke Sutherland, thank you so much. Greatly appreciated on Industrial America, that after the Wells Fargo story from Anna Levitt. Moments ago, Carl Weinberg and his team get out front of the weekend and the reading into Monday morning, and they state a week of revelations coming. That's how important they look at the economic data, Francine, to see if it's going to be some form of recovery, some form of stability, or the challenges that we saw early morning in France.
Yeah, look, next week, Tom, we also have some July trade data for China. Now, I think that will be especially interesting to see exactly, you know, how they're recovering from the pandemic and whether there's any read across for our countries in Europe. And of course, market sentiment, Tom, as you rightly said, there has been a churn to the market. That's partly due to the really bad economic data that we saw, PMI figures in France. And I guess a lot of traders maybe thought that the recovery in Europe would be smoother, but we have a number of cases resurging. And of course, those numbers point to an uneven recovery and much more uncertain recovery as well.
And now the key question in all of our conversations of the day, Francine, did you survive the surveillance-thon?
It was fun. I mean, did we have a bet on who would survive it better between you and me?
Well, we knew
I'm
I'd lose that.
Espresso number 3. I don't know whether that's a benchmark.
We will see. Francine Lacroix,
well caffeinated
thank you so much.
Is the key to success.
Thank you so much. Rumor has it one of them, Farrow or Abramowitz, are going to be back Monday. I have no idea which one, but we will see. Francine Lacroix, thank you so much. And I should say to Anna Edwards for her assistance through the week as well. It's been an extraordinary week. I can honestly say, other than 1998, it's never been an August like this, and I'm not sure we're even ending on August yet as well. Let me do the data check right now. Futures negative 20-something earlier, now negative 12, and maybe that's an August churn to a 23.57 on the VIX. Yield speaks, and yields are lower. The 10-year yield in a solid 345 basis points this week, 0.6266. 30-year bond 135, and that followed TIPS number negative 0.9964. Thank you to Matthew Hornbach of Morgan Stanley for giving us wisdom on the real yield. Coming up on Bloomberg Television, also on Bloomberg Live, Louis DeJoy, U.S. Postmaster General. A most interesting conversation as he testifies to the Senate. Stay with us through the day on Bloomberg Radio and on Bloomberg Television.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
From New York City, for our viewers worldwide, I'm Taylor Riggs, in for Jonathan Farrow. It is a Friday morning, and the countdown to the open, it starts now. We'll begin with the big issue, a stalling recovery, sending investors back into the sector, seemingly impervious to the pandemic.
Tech has been the shining star.
Redefining what is safe. Is V is becoming a U, the U could become a W.
There's still a fair amount of uncertainty.
I think it's going to be a real struggle.
Labor force participation is declining.
We do have what I would call the fiscal cliff.
The labor market as a whole is in dire straits.
At the earliest sign of trouble, you're going to see investors flock back into those defensive growth names.
We're just relying on one sector right now.
We are at the top end of historic ranges for valuation.
Tech has been so resilient.
That doesn't reflect the state of the U.S. economy.
Joining us now is Bloomberg's Abigail Doolittle. Abigail, we're getting record highs yesterday at the close on tech and big tech.
Well, good morning, Taylor, and that is correct. 2020, the year of big tech and those internet giants really soaring. Now, there have been moments where it seemed as though there was going to be more of a cyclical flavor to a potential recovery, but it's a stop-and-start situation, and it's now stopping for cyclicals and starting again for technology. If we go into the Bloomberg terminal, I will show you what I'm talking about, and what we're taking a look here is the difference between the NASDAQ 100 and the S&P 500 on the day. Yesterday, as you were mentioning, that NASDAQ 100, the FANGs putting in all-time highs, really outperforming. So 2020's defense, the new defense, is continuing to work right now in terms of pushing investors toward defense. It could have something to do with fears around whether or not stimulus will happen, the election, China-U.S. Tensions. Plus, remember, back in July, these companies, Apple, Amazon, Google, Facebook, they put up tremendous quarters and outlooks for the most part, so investors rewarding. Now, again, I was mentioning tech is the trade of the year. Flows on the QQQ show this. Take a look at this, Taylor. Pretty much every month this year, there have been big inflows into the QQQs, or a technology-based ETF. January and June, the exception. June, of course, was the month where it really seemed as though there was a chance that we were going to see a big cyclical move for stocks. But look at August right now. We're not even all the way through. Already $3.2 billion going into technology. Now, tech on the year is the top sector, making it so interesting because energy and financials are actually in a bear market. But out of the March lows, it's discretionary that's leading, up about 70%. And as you know, Taylor, that's all about Amazon. Right behind discretionary, technology up 65%, then materials and industrial. So a little bit of that reopening rotation there. But you know what, Taylor? It's all about those big tech and internet giants really on the move this year, and again in this month of August.
And that tech defensiveness really showing that strength. Abigail, thank you. Now, the softening data, though, underscoring the need for that further stimulus. Moderate House Democrats urging Speaker Pelosi to restart negotiations. In a letter obtained by Bloomberg, the group writing, quote, as the House prepares to vote this weekend on a bill to protect the U.S. Postal Service, we urge you to restart bipartisan negotiations on a fifth COVID-19 relief package. The reality is that only bipartisan solutions will deliver much needed support, and that requires principled compromise by both parties. I want to bring in Bloomberg's Michael McKee, who is the international economics and policy correspondent. Principled compromise, Mike.
Yeah, when was the last time we saw that in Washington? For most people, and I mean you on Wall Street, it's been a question of when, not if, Congress would act. But now that may be beginning to change. We turn to game theory. What's the motivation for each of the parties here? November 3rd, Election Day. You take a look at the calendar. The Postmaster General up on the Hill today, he's testifying. The House is back on Saturday to vote on additional aid to the Postal Service and require the Postal Service to restore service to what it was before the pandemic. Monday, he comes back again to the Hill. Don't expect anything to change. Republicans are going to defend him. Democrats are going to flay him, and whatever the House passes on Saturday isn't even going to be taken up by the Senate. And you throw in Donald Trump's unpredictability, you can see why this might all go pear-shaped. But there is a small chance, based on that letter and based on something the Republicans are working on, for a skinny bill. They'll go up a little bit, add $300 a week for additional unemployment benefits, give you more time to apply for PPP loans. No additional money, but more time to apply. They would give $10 billion to the Postal Service. The House wants 25, and they want a liability shield. So if you come back to work, you get COVID, you can't sue your boss. That's probably not going to go very far with Democrats. And so at this point, it is a bit of a stalemate. One proposed solution I've seen would have a continuing resolution built into it, though, and that might be a vehicle. Government runs out of money on September 30th. We could have a government shutdown October 1st if they don't do anything. If they include that in a bill, then maybe they get something that everybody can work with, because that's the kind of bill that you get a lot of Christmas treeing in, a lot of additional spending tucked into those kinds of measures. But given that we're about to start the Republican convention and the election's getting ever closer, I wouldn't hold my breath, Taylor, that we get that principled compromise you talk about.
Mike McKee, keeping us updated. Now, Bloomberg's Mike Pyle weighing in on the recovery, writing, quote, "The nature of the rebound will depend on the path of the outbreak, delivery of policy response, and potential changes to consumer and corporate behaviors. Success will not just be about restarting the economy and containing the virus, but balancing both objectives." And Mike joins us now. Mike, I'm curious if we can get a stimulus bill with equity markets near record highs, or do equity markets need to throw a tantrum to get Congress to wake up?
Well, I think a market response would certainly be one forcing mechanism to drive a deal in Washington. I think right now we have a little bit of a chicken and egg problem where markets are looking through this kind of fiscal turbulence to the end point of a deal, but the fact of the lack of market turbulence is in fact what's preventing a deal. But, you know, I think as we look ahead into the later part of this month and then through September, our base case is still that we see the two sides coming together to reach a deal somewhere in the neighborhood of $2 trillion or just short of it. But to the comments earlier, I think risks are rising that no deal at all is a material risk out there.
Mike, you mentioned that the markets are looking through some of the impasse and hoping for stimulus, as your base case states, later on in the year. Investors, though, typically look at fundamental analysis. In the markets right now, are we just higher based on some of that stimulus, or do you really see some fundamental recovery underway?
So I think it's both and. I think the stimulus on both the monetary side and the fiscal side has been just a tremendously key ingredient in terms of describing why markets have responded the way they have. On the fiscal side, obviously the labor market itself is in a historic degree of dislocation. But if you look at household incomes, at least until August 1st, and spending, they've held up much better. That's why this fiscal cliff is so important looking ahead. On the monetary side, in some ways, it's just been the supercharging of, you know, a lot of the trends that we've seen over the last 10 years or so. Aggressive monetary easing, ratcheting down discount rates, causing the value of long-dated cash flows, largely from tech firms, which have a lot of long-dated cash flows, to be more valuable. And that's exactly the response that we've seen in market pricing.
Mike, it's interesting, going through your notes, you're talking about that fiscal package and really the need for stimulus down to the states who are facing a lot of state budget shortfalls. I began my career looking at muni bonds, so this has a soft spot within my heart. Is it the austerity that then concerns you if you don't get stimulus to the states, and then the job cuts, and then that cycle that continues? What is it about that state budget shortfall that concerns you?
It's exactly that. I think if you looked at the job reports of the past couple of months, you're seeing that even as there are job gains at the aggregate level, beneath the hood, there's significant weakness around state and local employment. You look to officials like Mayor de Blasio here in New York, who says, in the absence of support, there are going to be 22,000 New York City workers let go. That's a story that's going to play out across the country, and those are real workers who really support the economy, who provide essential services. And I think that's a worry that we have around, how resilient the U.S. restart can be over the fall because we're facing that cliff.
Given some of the virus response and the stimulus that we've seen overseas in Europe, for example, some of that makes you favor European equities, and that really echoes the BofA fund manager survey that we got earlier this week, where for the first time in a long time, you're really starting to see European equities perhaps outperform, or investors would like them to. And yet, square that with me, because I keep hearing that European valuations, they trade at a discount for a reason. They're lower than the U.S. valuations for a reason. Why now the shift to European?
Yeah, so I'd make a couple of observations. First, our thesis has been that on the back of a robust public health response, on the back of an increasingly robust economic policy framework, that Europe, from a real economic perspective, was situated to be resilient to the downside and have a considerable degree of upside economically. That's begun to play out in terms of currency markets, where we've seen a lot of euro strength versus the dollar. But you're right, the composition of the European market, tilted more towards financials, tilted more towards equities, is a more challenging picture versus places like the U.S. That's why we like things like European exposures that have exposure to the export impulse globally, especially in Asia, like European exposures that are more situated and facing to the domestic European economy. So we think there are a lot of European stories that can really play out here, and we've begun to see that, like I said, through the currency markets.
What dynamics do you see driving further dollar weakness?
So I guess our key point right now is that I think the dollar weakness that we've seen seems to us pretty well explained by the typical drivers that describe the dollar. So, we've seen aggressive monetary easing that have really driven U.S. real rates to historic lows, compressed those differentials versus the rest of the world. We also think that the safe haven status of the dollar is very important. And in a moment when, post the most acute phase of the epidemic, where risk appetite has returned to markets, that's a very natural, weaker dollar environment as well. So as we look ahead, I think the question is, how are those fundamentals going to move from here? There are certainly some question marks over the safe haven status of the dollar, kind of looking ahead over the medium to long term. But for right now, what we've seen thus far seems entirely consistent with what you would expect.
Mike Pyle, thank you as always. And coming up, Joe Biden accepting the Democratic nomination for president, planning for immediate changes on day one in the White House. That conversation coming up next. We're speaking with TPW Investments co-founder and CIO, Jay Plosky. Taking a look in the markets, you've seen a little bit of a rollover after some of those record highs within the tech markets yesterday, just off about 0.2%. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
We still got 1.8 million, with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We will give tax credits to companies to bring jobs back to America. And if they don't do it, we'll put tariffs on those companies, and they'll have to pay us a lot of money.
We don't need a tax code that rewards wealth more than it rewards work. I'm not looking to punish anyone. Far from it. But it's long past time the wealthiest people and the biggest corporations in this country paid their fair share.
President Donald Trump and the Democratic nominee Joe Biden discussing a pair of much different tax policies during a busy night for the nation's capital. Kevin Cirilli, Bloomberg Chief Washington Correspondent, joining us now with more. That was a different set of ideas.
Yeah, precisely. And in fact, next week, I'm told they're going to hear all about lowering taxes. And that's something that Republicans feel will help them make some inroads in the polls, which have them trailing for the Democratic presidential nominee, Joe Biden. But let's dive a deeper look into Joe Biden's tax policy plan, because on the issue of the corporate tax rate, he's calling for $1 trillion, Taylor, in new taxes for corporations, including raising the corporate tax rate to 28%. It's currently at its level of 21%. Now, when you look at polls, particularly on taxing large financial institutions, taxing the wealthy and whatnot, that plays particularly well. However, the other political angle to this is that the president is still running slightly ahead of Joe Biden in terms of who Americans trust for handling the economy. So some competing data on the polls, and quite honestly, I don't think we're going to have a larger sorted out view until the debates when they can contrast those economic visions.
Yeah, Kevin Cirilli, you'll keep us updated. Thank you.
Thank you.
TPW's Jay Plosky saying markets are pricing in a Biden presidency, saying, quote, risk assets have taken as a given several key concerns, including an imminent U.S. stimulus package, a vaccine by year-end, a Biden presidency, and a non-kinetic U.S.-China struggle. He goes on to say he recognizes there is very little room for anything to go wrong. And Jay joins us now. Jay, what is the biggest risk, though, that something does go wrong?
Well, Taylor, I think markets have been remarkably impressive risk assets-wise, with the S&P hitting a new all-time high in August, certainly confounding the most people, which is the norm for markets, right? Always messing with the most people. I think the big risk here is lack of a stimulus package. I mean, the way we're looking at markets, Taylor, is what we call our COVID formula. So you control the virus. That allows you to reopen. That reopening allows you to stimulate domestic demand, which is key because global trade is down 20% year over year. That domestic demand stimulus allows you to broaden your stock market, have a rotation into the growth and value segments, and outperform. And that's what Asia and China and Europe have done over the last 3 months. Those are the leading markets. The U.S., to counter that point of view, the U.S. has failed to control COVID-19. The reopening thus is limited. Domestic demand is reduced, which means you need more stimulus, which leads to more political risk and has a big effect on the dollar, as we've seen. And that's where the U.S. is. So I think the market is really now going to have to think about the idea that it was protected on either side. Either you had growth and recovery, or you would get stimulus. So investors, in effect, were protected, no downside. Now, with the failure to have that package agreed between the Democrats and Republicans, that thesis is being called into question. And at the same time, you have tech, very extended, overbought, has done great, and you have the S&P at new all-time highs. So we're ripe for a pullback.
Let me break down a few of the comments that you said there. If we need more stimulus, that means running higher deficits and then eventually having to raise taxes. Are markets prepared for that?
Well, you know, deficits used to be an issue, right, Taylor? They're not an issue anymore, right? We have moved beyond that because we've exhausted monetary policy. You know, zero rates. You've got nowhere to go on monetary policy. We've brought fiscal policy in as necessary. As your prior guest said, it's been critical to sustaining the markets, certainly. And so now you have that question of, okay, do we just keep piling on more stimulus? And I think the answer so far is yes. And when you can borrow for free, right, if you think about it, the big difference between now and in the past is that governments can effectively borrow for free. And if the main issue is the carrying cost of debt is at a historic low, and so you should borrow more.
Okay, but doesn't a more heavily indebted corporation, a more heavily indebted society mean eventually slower growth?
You know, that's something we may end up testing, that thesis, Taylor. But for now, clearly you've seen in the credit markets almost unlimited demand for corporate debt, right? We've had record issuance across the credit spectrum, and I think that reflects the fact that there's a significant search for yield. We have trillions and trillions and trillions of dollars in money markets and in investments that are not yielding anything. And so investors are forced to go out on the risk curve and get access to some yield, and we're seeing that. So at the moment, I think the idea is we need support, government support, to stimulate the economy. My point would be in our COVID investing formula, the countries and regions that have controlled the virus have the best chance to stimulate their domestic demand profile, which consumers are in good shape, right? If you look at housing, you look at autos, whether it's U.S., China, or Europe, consumers are actually in reasonably good shape. The issue is to restart the economy, and our whole thesis of where we want to be invested is we want to be invested in the countries and regions that have gotten that COVID formula right, and that happens to be the non-U.S. markets for the most part.
Does going out on the risk curve mean out of U.S. into Europe?
You know, that's certainly part of it, right? For a U.S.-based investor, anytime you step outside your home market, you have risk. But by the same token, if you're a global investor, the U.S. is, what, 55% of global equities? Most people are overweight the U.S. because it's been the best place to be for a decade. One of the key questions that we're wrestling with and thinking about strategically is, are we at a point where COVID shifts that outperformance of the United States and leads to a leadership change, not only in terms of growth to value, defensive to cyclicals, but also from U.S. to non-U.S. Our view is that's likely to happen. U.S. has governance issues, political risk, and as we've said, has not controlled COVID, and so cannot stimulate its domestic demand profile.
I'm curious how you think U.S.-China relations would change if there is a Biden presidency in November. Does the rhetoric change? Do the pressure on China change?
That's a great question, Taylor, because our point of view is that markets hate uncertainty. And if there's one thing that's certain, it's that the U.S. and China are going to continue to bash each other. And that's why we wrote, as long as it's a non-kinetic, i.e. non-shooting environment, we think U.S. and China assets in particular will be fine. And look, China's the best performing big market in the world over the last year and year to date. The renminbi is at a 7-month high. So amidst all the noise, market participants are not worried, and I think that's right. My feeling is that we are pressuring China to become increasingly self-reliant across the board, from technology to finance. We're creating a stronger competitor. I don't really understand the thesis. I do think, to your question, that a Biden presidency will also challenge China. And I think the fear of the Chinese is that Biden will do it with allies, whereas Trump is trying to do it alone. And with allies is more of a risk to China than by itself.
Yeah, Jay Ploski, I think my big takeaway there is no room for error. So thank you for keeping us updated on that. And coming up, the analyst section you need to know, that's next in our morning calls. And later, Ed Yardeni, research president, joining us at the Open. And I want to flip aboard and take a look at what you're looking at. The Postmaster General, Louis DeJoy, giving, of course, his opening statements. This is a virtual hearing before the Senate Homeland Security and Governmental Affairs Committee. We will bring you the highlights later from that hearing. And in the markets, you're starting to get a little bit of a lift up within big tech. No surprise there. And take a look at what the impact that is having here on the Dow and the S&P coming off the bottoms. This is Bloomberg.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Time for the analyst calls. First up, Morgan Stanley upgrading Estee Lauder to overweight. The analyst is expecting key drivers to remain intact through the COVID environment. And Gordon Caskett upgrading Williams-Sonoma to a buy. The analyst citing favorable recovery business and strong digital trends. And finally, Wedbush downgrading D.R. Horton to neutral. The analyst saying that the stock is fairly reflects his outlook for the housing industry. Coming up, it is Yardeni research president Ed Yardeni. He's joining us for the opening bell. This is Bloomberg.
Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow. We are just moments away from the start of trading. NASDAQ, that defensive tech sector, surprise, surprise, finally flips back into the positive after posting record highs yesterday, trying to extend those leads. S&P futures certainly coming off the lows of the session as they are mostly unchanged. What is not unchanged is the bond market, catching a bid again with the 10-year yield coming down about 2-3 basis points. As you can see there, now down to just 63 basis points. You're getting a little bit of some dollar strength on the back of euro weakness, but commodities again, crude falling again for what will be another weak session. I want to go on over to the markets desk. Bloomberg's Abigail Doolittle joining us now with more stocks moving at the open. Abigail.
Hi there, Taylor. Well, let's start out with some earnings winners here on the open. Deere's popping solidly higher this after the agricultural equipment company put up a very solid quarter, popping by about 2.9%. They also importantly raised the outlook. It looks like farm equipment demand is pretty resilient. Now, they did announce broad employee separation programs to become leaner. Investors seem to like that cost cutting, again, up 3.6%. Now, Buckle, the casual clothing company shares are absolutely soaring. This on a big beat, and not surprisingly, this has a lot to do with online sales. Revenues up 99%. Foot Locker up 7.25%. This after the second quarter adjusted earnings were 16 cents better at 71 cents, and the comps up 18.6%. In fact, all of this good enough for Foot Locker to reinstate the dividend. Now, turning to some virus movers, Pfizer and BioNTech, we will see some gains here as the COVID vaccine that they are sharing and working on together. Some additional phase 1 data has come out. It's very constructive. They're moving into 2 and 3, on track to seek approval, set to deliver 100 million doses, perhaps by year end. And then Johnson & Johnson, not wanting to be left behind, they're planning a huge phase 3 test, Taylor, 60,000 volunteers, twice the size of current phase 3 trials. At this point, not surprisingly, there are so many vaccine possibilities out there, 160 to be exact, everybody in a race to find the vaccine to COVID-19, Taylor.
Yeah, I mean, can't wait for those to come to fruition so we can get a little bit of a sense of normalcy around here. Thank you, Bloomberg's Abigail Doolittle. Now the rally narrowing with tech reclaiming its leadership position. Bloomberg's Scarlett Fu joins us with more. Scarlett, I sound like a broken record.
We all sound like broken records, and it's just a sense of how narrow this rally is that Andy Cinco over at MLive blog points out that only 30% of the S&P 500's advancers yesterday rose. Now, that's only happened 2 other times since the mid-90s. In February 2000, you know what happened after that, and July 2001. Right now, big tech is certainly getting all the love. The Qs, which track the NASDAQ 100, and of course that gets 47% of its value from the usual 5 tech names, has seen $2.4 billion in inflows this month. Jack Manley over at JP Morgan Asset Management says it's pretty easy to justify the tech-driven rally so far because these companies have been able to maintain and expand their earnings power. It's harder to justify why the market should keep rising from here, especially given the long list of worries, which range from school reopenings to the possibility of a second wave, November elections, fears of a Democratic sweep, tensions with China, and what you've been discussing now, the cost of stimulus, right? Over-leveraged corporate sector and inflation. If you look at the most recent flow data, it reflects a more defensive positioning. So there are some cracks emerging here. In the past week, $7.8 billion exited U.S. stock funds. That's according to Bank of America, which cites EPFR data. That is the most withdrawn in 15 weeks. Meantime, you look at the money going into bond funds, $14.5 billion. Credit is also seeing an upgrade in quality as well. Investment grade funds getting $5 billion in inflows. That's now 19 straight weeks of inflows, while junk bond funds have seen a withdrawal. Okay, 300 million, not a ton compared to what we've seen so far this year, but it's a change in direction that gets my attention, Taylor.
Yeah, Scarlet Fu, I keep hearing those high yield bonds, I should say, more like an equity light in some of these situations. Scarlet Fu, thank you as always. Now, Ed Yardeni of Yardeni Research, among the earlier strategists to raise his S&P 500 target, boosting it 20% to 3,500 in early August. He's writing, quote, "It seems to us that the stock market already has discounted lots of the good news likely to occur through the end of next year. The market is experiencing a melt-up, making it hard to predict the upside and also raising the risk of a meltdown along the way up." Ed joining us now. Ed, is the Fed solely responsible for a price target migration from a 2,900 to a 3,500?
Well, the short answer is it's mostly all about the Fed. The Fed came in on March 23rd with just an extraordinary amount of monetary stimulus. Prior to that, for the past 10 years, they've been using bazookas to try to keep the economy going and fighting off the economy's enemies. Then we all thought that maybe they would go to helicopter money. Instead, they went to B-52 bombers and carpet bombed the economy with cash. And they continue to do so. So that's a big part of the story. But the other part of the story is, the economy is actually doing pretty well, with one rather important exception. The labor market's still struggling, but retail sales, all-time record high, just a complete V-shaped recovery in U.S. retail sales. And, oh, by the way, over in Europe, the same story. We've had a V-shaped recovery in retail sales over there. So, we've never really had an experience with a lockdown recession, and we never had an experience with what happens when you reduce the restrictions and people start coming out of their cabins. Well, they had cabin fever and they go spending.
Interesting. So you do see some of the fresh record highs and further upward migration as fundamental and not just maybe momentum?
Absolutely. Not only that, but I watch analyst consensus expectations for earnings on a weekly basis, and they bottomed actually a few weeks ago, both for this year and next year. Bottoming isn't great. You want to see this thing going up, but after seeing the free fall that we saw in earnings expectations, a bottom looks pretty good to me for now. And I do think we're going to see analysts increasingly, especially for next year, raising their estimates for next year, because I think we are going to have a vaccine. I think one way or the other, until the vaccine, we're going to learn to live with it, because there have been kind of renewed waves of the first wave. I don't think we're even in the second wave. I think people are going to be more cautious. I hope so anyways.
I think what really stood out to me in your note is you see some rising risks of meltdowns along the way up through the melt up. What type, when, how much of these sort of mini corrections are you seeing on our way further higher?
Well, I don't really have much experience with melt-ups and meltdowns. None of us do. They don't occur that often. I mean, the last really big one was, the party we had in 1999. And we saw valuation multiples going straight up, led by large cap technology like now. Back then, though, the earnings were more questionable for technology than they are now. And then it didn't take much, but in 2000, we had a pretty significant meltdown in the market. I do worry that, with multiples for the big tech names up collectively around 40, and this is based on forward earnings. That's pretty elevated, and it does make us a little bit more vulnerable to a meltdown. But for now, I'm really focusing more on the melt-up side of this market performance.
And Ed, we've been having discussions on this all week, and it was David Kostin over at Goldman Sachs who upped his price target in part because of that little r. As you know, the rate at which you're discounting those future valuations, which in some parts, as long as that little r is zero, as the Fed has said, those high valuations can be justified. Is that what you see?
Yeah, I mean, that's a very important point. The yield curve is close to zero across the spectrum, from the Fed funds rate to the 10-year bond yield. The 10-year bond yield has been below 1% since late March, and it's just not a very attractive return. And granted that there's still money going into bond funds, there's so much liquidity that's been poured in by the central bank, by the Fed, by other central banks. by the Treasury and checks that not all of them have been spent yet, that I think there's enough money to power this market still higher, and that probably means higher valuations.
A lot of critics, though, Ed, would say that a more heavily indebted society, more heavily indebted corporations, future growth prospects are then going to servicing that debt. Does that hamper growth?
Well, it could at some point. I mean, the reality is debt isn't as stimulative as it used to be when we think about the demand side of the economy, where debt has created a lot of excesses, really has been on the supply side. We probably have a lot of zombie companies that if interest rates were normal right now, and if everything was normal, some of these zombies wouldn't be in business because they're just not making any money and they're burning cash. But their ability to go refinance their debts and to borrow more money in the junk bond market, for example, keeps supply going. And it's not just an American phenomenon, it's also very much a global phenomenon, especially in China. And that's kept inflation down. And then perversely, because inflation has been kept down, guess what? Central banks have been able to pour liquidity in without worrying about inflation making a comeback.
You're reading my mind. What is the risk, finally here, that inflation surprises to the upside and we're all caught off a little bit off guard?
That is a concern I hear more and more from our accounts and certainly in the media, as we're all thinking like, my God, what have we done and where is it all heading? I'm not convinced that inflation is going to make a comeback. You know, the Fed is about to announce that they're willing to tolerate inflation above 2%, which honestly is, I mean, it's a little bit of a joke because they haven't even been able to get it up to 2%. So what are they talking about that they'll tolerate it if it's a little bit above 2%? I think Fed officials are expecting that with everything they've done, they will get inflation finally above 2%. But I think they'll tolerate it and they'll keep interest rates near zero. I don't see Weimar or Zimbabwe coming out of this thing. I don't see hyperinflation. I think the model's more like Japan, which has tried lots of stimulus, and yet inflation remains near zero.
Ed Yardeni pushing us forward to inflation and 3,500 price target S&P. Thank you. And coming up, we're breaking another important piece of economic data. U.S. PMIs crossing the wire shortly. We'll have reaction from J.P. Morgan's chief economist, Bruce Kasman. That's next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We take a look at where we are in the markets, trying to inch a little bit higher. The good news is we are off the lows of the session here when we were all in the red, finally trying to get a little bit of a lift up, of course, as we've heard some pretty bullish comments from strategists so far today. I want to go on over to the Eurozone because that economy unexpectedly losing momentum this month after a resurgence of coronavirus cases. Service PMI data plunging to a level that comes close to signaling stagflation. Aberdeen's James Athey weighing in on Europe's recovery.
There are severe structural issues, and really the ability to mask those structural issues with cyclical strength has been something which we've seen maybe 1 year in the last 10 at least. And the environment we found ourselves in just a few weeks ago was one really where the market embraced this narrative that Europe had had a quote-unquote good virus and therefore it had a strong economic outlook. I certainly would not favour being heavily invested in Europe at all, and certainly not when the currency is as strong as it is at the moment.
Bloomberg International Economic and Policy Correspondent Mike McKee joining us now. Mike, any translation from Europe to what we could expect from the U.S. any moment?
Well, you're looking, Taylor, at a big drop in bond yields, the lowest in a week, and it's a response to weaker than expected data in Europe. The PMIs that come out preliminary at the beginning of each month showing that the Eurozone, France, and Germany saw pretty much declines across the board in the manufacturing and services PMIs. And you look at France, hit it the hardest. They go below the contraction level to 49 for manufacturing, puts the composites for all of these at lower levels than they had been going into the month. It is a sign that the virus and its return has started having an effect on the European economy. And we're looking now to see what happens in the United States. Oddly enough, it looks like the U.S. doing a little bit better than expected. The PMIs for the U.S., this comes from market, this is not the ISM number, but manufacturing at 53.6 and services at 54.8, both up from the 50.9 and 50.0 level that we saw the prior month, and the composite in the U.S., 54.7, well up from 50.3. So the U.S. an outperformer, even though we are seeing a rise in virus transmission here in the United States, and we have seen a number of states and cities shut down some industries, doesn't look like there's an impact in these PMIs. Now, it's important to keep in mind, these are sentiment indexes. Is this month better than last month? And the fact that August seems to be better than last month might be considered good news. Let's see what happens, what kind of bond market reaction we get.
Yeah, Bloomberg's Mike McKee breaking that all down for us. And I want to bring in Bruce Kasman of JP Morgan, who joins us. And Bruce, we've given you a cool 30 seconds to look over this data. Does this sort of solidify this could be a V-shaped recovery?
No, not at all. I mean, first of all, the PMIs, I think, are diffusion indices. And in the current environment where we're getting such volatile moves in growth, they are really limited in their information. I think what they do tell us when I put the U.S. reading together with the European reading is that manufacturing is continuing to have a very strong run in the summer. That's not surprising. We had a big bounce in spending on the consumer side, and now inventories are kicking in. Global trade is picking up. But there's a real threat. One threat is in the service sector, particularly around the virus. You can see that in the European survey, France and probably Spain getting hit hardest. And we also have the threat of the failure to extend the benefits in the U.S., which don't look like they've showed up in the data yet, but they are clearly a threat if we don't get this passed in the next few weeks.
Bruce, it's interesting. All of my comments this morning have said Europe has done a better job of containing the virus. That economy looks better. They've had better fiscal stimulus. And yet, I know that there is some hesitation around the data this morning, but at least for now, it does look like perhaps maybe the U.S. has gotten a job well done on partly trying to control this virus. What do you see now between the U.S. and Europe?
Well, I think the first point we have to recognize is Europe had a deeper downturn than the U.S. and is having a stronger initial recovery. Our forecast for the third quarter has 60% GDP gains annualized in the euro area, over 90% in the UK, and we've got 20 in the US. So, and I don't think the PMI data this morning challenges that the lift we're getting into the summer months in Europe is a lot stronger than the US. Now, the question about where we go forward, I think, is a hard one. The US had a lot more front-loaded stimulus, but is at risk of losing it. Both regions are having problems with the virus, although Europe is starting from a much better position. On net, we think Europe is going to outperform, but the jury is still out here, and I don't think the PMI data this morning really tells us that much about who's going to outperform.
Bruce, on that stimulus comments, what does your math tell you about $600 in extra unemployment benefits versus $400 a month versus $200 a month?
Well, right now we've got zero, so I think we should recognize that we are in a phase now where those benefits have been exhausted. We're not getting the extra checks. These are things we had built into our forecast. I think if you look at the net effect of not extending it all, we're probably talking about a drag on the U.S. economy of somewhere close to 2 percentage points over the next 4 quarters. Obviously, in a quarter where we're growing 20%, that doesn't sound like a lot. But in terms of getting a more complete, what you call a V-shaped recovery, that's a huge difference. And it's very important both that we get the stimulus and that we also don't prevent another cliff from taking place later this year when these emergency benefits, which are being delivered in very short doses, will then once again be removed.
Bruce, pushing this story forward, in the next week or two, what are some of the key data points, key economic indicators that you're looking for to further solidify where we are in this recovery?
Well, we're in a funny phase because the hard activity data we're seeing is still really for the month of July. And I think July was a strong month in the U.S. I think July is a strong month globally. We're really looking at it to see whether we're right, that broad-based pickup is there. But what we're really focusing on is the alt data, the high-frequency data, and the survey data in terms of what it's telling us about August, and perhaps August turning into September. That's where the risks around losing the benefits, that's where the risks about virus containment are a problem. Our card data is telling us that consumer spending has slowed in growth, but is continuing to grow. Our trackers are pointing to another 1 million gain in employment in August. So things are still looking good, but the threat is there, and we have to really keep our eyes on what the high-frequency data is telling us here.
And on that virus containment, it was Nouriel Roubini telling Bloomberg earlier this morning he does see a V to a U to a W if no vaccine. How much of this is contingent on a vaccine in the next, let's say, 6-12 months?
Well, I think the basic point here I would make is that it is unreasonable to think that 6 months from now we will have a vaccine and we will have it implemented in a way that it is going to change the course of activity immediately. There's no doubt that where we go over the next 2 years depends on how well we contain, how quickly we can get a vaccine, and whether we can get past this. But our basic macro view, which has an incomplete recovery in both the U.S. and in Western Europe, basically builds in the idea that the virus is going to linger as a threat, it's going to affect behavior, it's going to have an impact on policy, and it's going to not allow economies to get fully back to where they were before the virus hit.
Bruce Kasman, always too short, always need more time, of JP Morgan. Thank you for your comments. And coming up, Postmaster General Louis DeJoy testifying before the Senate Homeland Security and Governmental Affairs Committee. We will bring you the highlights from that hearing next. And if you just take a look where we are in the markets, trying to get a little bit of a lift despite a drag over there in Europe, U.S. continuing to push forward. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
This is Bloomberg Markets, The Open. Come and take a look at where we are. The headline indices showing a much better picture than underneath the surface, where you have everything but 3 sectors now in the red, really trying to show some of those cyclical stocks finally here outperforming. But you are getting a little bit of a sense of some, well, risk aversion here. If you just look that basically we are unchanged, but trying to extend some of those record highs that we saw yesterday. I want to go on over to the Bloomberg Markets desk. Abigail Doolittle joins us with more. Abigail, what are you seeing?
Well, Taylor, one stock that's showing no risk aversion is the unstoppable Tesla, still above $2,000 per share. Really pretty incredible. Over the last 7 days, up 45% ahead of or after that 5-for-1 stock split has been announced. Salesforce.com, however, lower as Loop Capital starts at a sell, seeing material business slides there. Boeing is higher now, slightly had been lower. Emirates Air is swapping jet orders for smaller planes. And Wells Fargo, Taylor, as you know, they are going to be resuming job cuts, may start to cut jobs by tens of thousands.
Yeah, thank you there. Bloomberg's Abigail Doolittle. Postmaster General Louis DeJoy testifying before the Senate Homeland Security and Governmental Affairs Committee. Bloomberg Chief Washington Correspondent Kevin Cirilli joining us with the headlines. What's your key takeaway so far?
He's saying that the ballots will get delivered on time, and this comes facing intense political pressure, Taylor, from Democrats who are questioning whether or not the U.S. Postal Service is adequately funded. Republicans are also pressing for the notion that this patchwork of regulatory policies across the country has led to voter confusion. But the bottom line, the top headline, is that the U.S. Postmaster General, Louis DeJoy, is saying that election mail will get delivered on time. And meanwhile, he's also saying, quote, as we head into the election season, I want to assure this committee and the American public that the Postal Service is fully capable and committed to delivering the nation's election mail on time. Taylor?
Well, you need to learn to be running more marathons with me on time, Kevin. That'll be my key takeaway as we head into the weekend. Kevin Cirilli there, Bloomberg Chief Washington Correspondent. That was the countdown to the open. Hang with us. We have much more coming up next. This is Bloomberg TV.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest-hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look into him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. If you do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you'll use the most to send to each other?
So there's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949, in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
There's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I'm currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low. And America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high. And then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to say, 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word, beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant and libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, not the world, and of course that's Palantir.
The incredibly controversial secret of data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You had a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree, global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is open, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
a bit like an addiction. You've got to make something. You have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweler. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes. You can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled freight